How to purchase real estate with a self-directed IRA. Welcome back. I'm Ted Thomas. I've been involved in real estate since 1970. I've been involved with tax lien certificates for the past 30 years. In this episode, I'm going to cover how to purchase real estate with a self-directed IRA. There's thousands of tax lien certificates available and sold every year. Now, when I say thousands, the state of Florida alone will have over 1 million certificates available each year. And you can start with $50, $500, or $50,000. But there's going to be plenty of auctions and a place for you to make money. If you have an IRA, you want to seriously consider putting your tax lien certificates in your IRA or using your Roth IRA to actually purchase property. Now, I'm going to show you investors and how they make money with tax deeds on this video, and I'm also going to show you, when I finish, the big mistakes that investors make at auctions and how you can avoid those mistakes. So stay tuned, I'll come right back. Well, let's do a little foundational material to start out with. So the tax liens and tax deeds are available in all of the states. Now, there's 3,000 counties. Half of the counties will sell tax lien certificates. The other half of the counties will sell tax deeds. Now, you can purchase either of those in a self-directed IRA, okay? Now, the tax lien certificates, what you're doing there is you're paying someone's taxes. Now, you do not get possession of the property. What you do is you get a receipt. It's called a tax lien certificate, and that certificate will pay a mandated amount. It could be 16%, 18, 24, all the way up to 36%. But whatever percent you bid, you will get that percent. Now, you're not getting possession of a property. Now, the tax lien certificate will pay you cash. So it's an investment where you make cash, which is perfect to go into an IRA. Once the money's in the IRA, it's not taxable until you take it out if it's a traditional IRA. It's not taxable in a Roth IRA for the whole time it's in the investment, but you must pay the taxes going in. There's quite a difference. Now, this system of tax collection has been around for over 200 years. Okay, I didn't invent it. I just studied it. Then I created different materials so you could learn how to do it. Whether you want to learn on video, you want to learn on audio, you want to learn from a coach, we have all different ways that you can learn it. So all of the counties are going to sell some form of a tax lien certificate or a tax deed. Now, why are the counties doing that? The counties need money, and all the money that the county gets basically comes from property taxes. So every property owner is required to pay property tax. If they don't pay property tax, they forfeit their ability to own the property. So the county treasurer controls all this. So first of all, the legislature said to the county treasurer, levy the taxes, collect the taxes. If you can't collect the taxes, then you must confiscate the property and resell it. So in one case, they're selling a tax certificate. In another case, they're confiscating the property. Now, why are they doing that? They're doing that because they need money. What do they need money for? The counties always need money to pay school teachers, to pay the police department, to pay the firefighters. All these people have to be paid. Schools have to be built, roads have to be built and maintained. All of those bills are the county bills to pay, plus all the county employees. Now, if you'd like to know more about tax lien certificates, or you'd like to know what the rate was in your state, just let me know below. Just make a comment about this video. If you want, you can ask a question. And if you want to know what the rate is in your state, just let me know, and I'll send you back a note, and I'll send you a gift with that note when I do that. So tax lien certificates, the owner is not evicted from the property. All of the states that sell tax lien certificates are benevolent states. They're not throwing the property owner out of the property. They don't evict the property owner. Okay, what they do is they issue a tax lien certificate. If the people don't ever pay the tax certificate, then action will happen. And the action that will happen is they'll be evicted and you'll be granted the property. So with a tax lien certificate, that's a perfect thing for your Roth IRA. Why? Because if they don't pay, you'll get the property. Now, that property would be in the IRA. Any growth within that IRA is not taxable. It's really something to think about. Now, tax deeds means they confiscate the property. So half of the states confiscate the property immediately, resell it, and when they resell it, you can buy those as tax deeds at the auction. There'll be at least 5,000 auctions this year. Now, I'm not a CPA, I'm not a broker, I'm not an attorney. All my experience comes from working in the trenches and doing this for the past 25 years. I'm an investor just like you are, but I'm also an author and a publisher, and I guide people in this business. A self-directed retirement account is something you definitely want. You do want to learn about traditional IRAs, and you do want to learn about Roth IRA. The big investors prefer the Roth IRA because they purchase, they pay a small tax, and then there's no tax for the life of that IRA. All right, am I an insurance man selling you IRA or a banker? No, I'm just trying to tell you this is just another way where you could be making money. This particular session has been, can you purchase real estate with a self-directed IRA? And the answer to that question is a resounding yes. IRA accounts are the perfect way to do it, and you'll gain a lot more money than if you do it just on your own. Why will you gain more money? Because the Congress has set aside tax deductions for the traditional IRA and for the Roth IRA. So what do you have to do to get started? Well, number one, get yourself educated on tax liens and tax deeds. Then get yourself educated on tax liens and tax deeds within these individual retirement accounts. Tax lien certificates are a passive investment. Tax deeds are an active investment because you're going to end up with property. All right, so what did we talk about? We talked about Roth IRA. We talked about traditional IRA. You're allowed to own one or you can own both. It's going to be up to you what you want to do with your money. All right, I'm going to answer 2 questions, and then we'll go to giving you a free gift. Okay, the question is, can I talk about homestead property? And the answer is no, I can't. I'm not an attorney, so I can't give you advice in that area. There's only 2 or 3 states that have any homestead that would affect a tax auction. But let me tell you one thing about homestead. If anybody out there believes that they're going to homestead a property and not pay taxes, you need to forget that right away, because the tax law goes right around the homestead law. The tax law, if the property tax is not paid, the property is going to auction. Homestead or no homestead, it's going to auction. Okay, I can't recommend legal things. I'm not an attorney. You'll have to talk to an attorney about that. I can tell you from experience that most investors prefer to start a limited liability company for one or multiple properties. That's going to be up to you. You really need to talk to an attorney about that. I'm not an attorney. I can't give you legal advice. Okay, so let's talk about those 2 big mistakes. Number one, people show up at the auction and they right away start bidding. They're really excited, so they want to get going. You don't want to bid at an auction if you haven't seen the property. Why? What if there was a hurricane? What if there was a big storm and there was a flood? What if there was a fire? Something might have happened to that property since you last looked at it. So if you've not looked at it, don't bid at all. If you have looked at it, it has to be recent, very close to the auction time. So looking at a property, a lot of people don't do it, and then they get in big trouble and they lose a lot of money because the property isn't any good when they get there. So that's number one. Number two, you don't want to bid in an auction unless you have an exit strategy. So if you don't know what you're going to sell the property for, how can you plan on bidding? You could easily bid too high. So what you want to do is you want to plan your purchases. So you need to know exactly what the property is worth, what you can sell it for, and what you can sell it for quickly before you start bidding at auction. That's called an exit strategy. All right, folks, if you learned a lot in these lessons, we have a lot more for you, and all you have to do is join my community. Now, I have a gift for you if you do join the community, and all you have to do is go below me, but the gift is a quick start. Now, what does quick start mean? It's just a short course that's online that you can start right away learning about tax liens and deeds. The first part of the quick start is about tax lien certificate. The second part is all about tax deeds. You can learn both of those, and you can do that. Just go below me. It's a free course. It's my gift to you.